Happy Friday. It's Olbrantz with This Weekend in Rates. Hope you had a wonderful week. Can you believe that January is already wrapped up? That went by so fast, so fast. So we have a couple things that we're going to cover here. What I'm going to add to this week is we're actually going to take a look at the very end, the charts, the actual live trading of mortgage-backed securities. So you can see the trends and kind of what we're faced against from a technical side. So hang in there if that's something you're interested in. But with that, what do you say we get started? Let's take a look at what happened this week, where rates are at, what to expect, and then let's look at the charts. Okay, so where our rates are at today. Ooh, I hate it when that happens. So these are the average interest rates out there in the market. If you take a look, whether this is an email or if you're watching me live here, there I put it in the comments where our current rates are at. And I'm pretty proud to say our rates are lower than the average rates out there, but this gives us a general trend. And from last time we did a video, you can see that rates are about 1/8% better than they were last time we did this little show. Remember, 2025 forecast. It's already passed. I did it, but I have it on YouTube. There was a lot of great information on this. We talked about where interest rates are going, where housing is going. But I think more importantly, not only do we give a prediction on what's going to happen, we also backed it by facts. We backed it by numbers with unemployment, with how many buyers are coming into the market, how many houses are for sale. It's pretty in depth. If you want the copy or the link, send me a message, whether it be through Messenger or email, or just give me a call. I'd be happy to send it to you. If you are looking to whether you're looking to refinance or buy a house today, this is something you need to know, because one of the things that I come across with a lot are buyers that are saying, I'm going to wait for the interest rates to come down. That happens probably 80% of the conversation or conversations I have. So if you are one of those people that are waiting for interest rates to come down, I want you to know you're not alone, which, by the way, depending on how you look at it, is good news or bad news. What do I mean by that? In my experience, that when you have interest rates hit that 6.25%, 6.5%, a lot of people, or some people, are sitting on the sidelines, start coming out and start shopping for houses, where right now rates are in the high sixes, maybe even low sevens, depending on your credit score and stuff like that. People are still sitting it out. Therefore, you have less competition. We're seeing offers be accepted with closing costs being paid for, 3-2-1 buy downs, things that once rates hit that 6.25% and there's more competition, you may not see. So when is the right time to buy? Well, I would challenge you to think that it's when the interest rates go down, because that's when everybody's going to buy. So no, I shouldn't say everybody. That's when a lot of people are going to come out and you're going to see more competition. So just, things to think about there. That's what I'm here for. So if you watch the forecast, you know that, and you listen to this little show I do here, that inflation is everything as it relates to 30-year fixed rates. Inflation, unemployment, but it all really ties down to inflation. And in that 2000 forecast, I go over why the Fed's goal rate of PCE is 2%. Why at 2.8 may be a little bit overstated. And just to kind of give you an idea, it's how shelter is calculated. If shelter was calculated, which is a part of core PCE, in actual today's numbers, that number would be much, 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 much lower. And that is going to help the inflation fears, especially as it relates to bond market. And that once those numbers start coming in, and we can start seeing that as early as next month, start coming in, you can start seeing interest rates really react in a positive way to that news. The forecast, I wanted to give you a little piece of what I did in my 2025 forecast. I forgot I put this in here. Not only do we look at a local or a national level, but we did break down a few different counties here. So if you look at Marin County, the MBS forecasts appreciation to be 5.14%. Sonoma County in 2025 is 5.75%. Napa County 5.52%. Solano County 5.2%. Contra Costa 5.342%. I got to tell you, great wealth can be created through single-digit appreciation. So it's why do we think that appreciation is going to happen over the next year? Well, you got to watch the video, because that video tells you everything. All right, what's going on next week? Next week is a huge week as it relates to the job market. We have the JOLTS coming out, the BLS jobs report coming out on Friday, and initial jobless claims, which comes out every Thursday, but it's coming on Thursday as well. Feds are so focused on unemployment that this is something, these numbers next week can really dictate what is going to happen next week in interest rates, whether they increase or whether they decrease. Let me show you. Now's a good time to bring on the technicals of the mortgage-backed security. So this is actual live trading of a mortgage-backed security. This is where 30-year fixed rates are derived. So I'm going to get rid of myself here. I'm going to get my pointer over here. Now, the confusing piece of this is as mortgage bonds go down in price, the interest rate actually goes up. So it's an indirect relationship here. So you can see, the rates, really took a dive around January 9th. We saw a big increase in interest rates. We got a nice little rally back. But here's this week right here. We're trading in this little channel here. Right here is going to be the 200-day. We have a floor of the 50-day moving average. And so in order to break through, either go higher or lower, it's going to be dictated on the news that comes out. Next week is the type of news, especially as it relates to unemployment, that can break us through that 200-day or break us through that 50-day moving average, which could put an increase or decrease on interest rates. So you really want to pay attention, especially if you're getting your offers accepted over the weekend. Just know that it's very important to connect right away on Monday with your loan officer. And I don't know why we're not working together, because we're not. We really should be working together. We're going to talk about that in a second, me and you. But we want to make sure that you're always kept up to date on what's going on in the market, because we don't like surprises, and either should you. So speaking of which, if we are not working together, if you're somebody out there that bought a home, congratulations. But you may have a great chance to refinance here coming up the next 5-6 months. I think I gave out a little bit of that forecast here, predictions. Hit that QR code, book an appointment, reach out to me. Would love to connect. If you're looking to buy a home, or maybe you're not ready to buy yet, but you just want some information, that Hopes and Dreams meeting, we don't pull credit, we don't take applications. It's just me and you. Utilize my 20 years of experience. I can't believe that, by the way, in this industry. Let me help you and your family put together a plan and help you guys get on that path to homeownership. So with that, I hope you have a wonderful weekend. If you need me, I'm available. Paul Olbrantz, Clear to Close.